Hello, everybody, and welcome to Trending Thursday. My name is Glenn Tompkins, senior instructor here at VectorVest. Always love being here. Glad to have you here. If you can hear me loud and clear, please respond in the affirmative. Whether you're on Facebook or on YouTube, I'm tracking on both um, um, streams or comments today. So I got 14 people looking at me on Facebook, and I got a lot more watching me on YouTube, which is awesome. So, you know something? If you can hear me, type in the room VV Nation and tell me where you're tuning in from. And by the way, Feliz de Cinco de Mayo. Did I say that right, Joey?
Kinda. You didn't have to use a weird accent.
What about the weird accent? That was a good accent. That was my Spanish accent. That was my New York Spanish accent. All right. So we got a lot to cover today. This market, I'm seeing likes, I'm seeing some thumbs come up on Facebook, but I'm looking at, oh, are you in Troutman for real, Robert? I'm right here in Mooresville. That's kind of cool, Robert. You're in Troutman? Oh, that's awesome. Hi, Glenn. Looking good, mate. Thank you, John. I appreciate that. Sharu's coming in from Alberta. Wow, Dan is from Sweden. Hello. I don't know a Swedish accent. What's a Swedish accent? Da? Oh, I don't know. Jay, stay on one side, whether it's on the YouTube side or the Facebook side. Stay on one side, man. Get me confused. I got somebody from Sydney, Australia. Is that Jin? Do I just say Jin? From Sydney, Australia. Thank you for being here. Julian from the UK. Scott's in Raleigh. Right up there. I gotta like that. Nice Spanglish accent, says Jay. There you go. All right. So normally I want to talk to, make sure that I recognize everybody, but today is going to be a little different. Rob on Facebook says, "Hi, Glenn. Sounding better than the market. Greetings from Oxfordshire. That's like 3 different places. Oxford and some in another shire. That's a lot of places all in one place. But thank you for being in here today. And on Facebook as well, we have Wendell in Michigan. So today, you notice the color shirt I got on, right? It's the blue shirt. Normally, when I do videos in my blue shirt, that's more of an education thing. Today is going to be not Morrisville, Mooresville. I live in Mooresville. Today is going to be an interesting day because the market looks like poopy. That is the technical term, poopy. And as you can see right here, the Dow is still down over 1,000 points. Everything is down in excess of 2% across the board. Now, why do we want to spend more time on that? Well, the reason why I want to do that is because the Fed came on yesterday. I think Patrick and I covered it nicely, the real live Fed reaction as the market took off. It was interesting that the market took off the way that it did, and I've come to the realization, I think it was a lot of short covering, probably a lot of algos getting out of stocks. There was no real reason. Now listen to me. There was no real reason why the market should have taken off yesterday. Why? Especially because we're raising interest rates, and we raised it higher than the first one. All right, the first one was a 1/4 point. This was a 1/2 point. And Powell set the stage and said that for the foreseeable future, it's going to be at that 1/2 basis point. Just think, for every 2 sessions, we're raising the interest rate by 1%. Now, we're still low. Even though with all of that, we're still low as far as interest rates are concerned. But it's interesting that how we wiped out everything and then some today. Now, believe you me, with that raise that we had yesterday in the market, it wasn't us that did that. That was a combination of both short covering and algos. There's no way in the world that we as the retail investor should have moved the market up like that yesterday. So it was very interesting, and I want to spend a little time talking about that. And the reason why is because it's affecting your portfolios. It's affecting many of your portfolios. Now, John says, my VV stocks are doing great on the short side. Wouldn't have been able to do it without VectorVest. Been doing this for years. Can't wait to cash out and ride the wave up again. Well, the reason why John says that is because we weren't, even with the market looking for a bottom, we weren't full gun-ho yet on saying that it was time to go bottom fishing. And in our jockey club, I got the questions this morning. Hey, Glenn, you ready to pull the trigger on bottom fishing? And I was looking at a couple of things. Nothing was really adding up to the point that we were ready to go bottom fishing. And I know a lot of people out there were like the same way. Let's go bottom fishing. If you were super aggressive, you probably went bottom fishing yesterday. Notice that the move in the market didn't happen until later in the afternoon. Now, if we had a big day like we had yesterday, but it started from the market open and rose and rose and rose and rose, then I could look at yesterday as a blast-off day for us to go bottom fishing. But that didn't quite happen that way. Alex says, my puts got nuked yesterday, even got stopped out of an Apple put. Absolutely, because, Alex, the market went up crazy yesterday. Went up a lot yesterday. And a lot of people got stopped out of a lot of their short stops. And now looking at today, we're like, holy smokes, why didn't I hold on? Well, no. You did the right thing. Based upon your trading plan and how you traded those stocks, you did exactly what you were supposed to do. So I don't want anybody to sit back in the room right now and say, man, I should have held on to them today. You know why? Because hindsight is 20/20. You traded your plan. The stocks that you was short on or had your puts on probably got stopped out yesterday. So is this time to go short the market? I'm not going to say that yet still, but we're going to talk about that today, Scott, because I know everybody is here and knowing, well, what do I need to do? Well, the first thing you need to do is not panic. Never let them see you sweat, all right? Don't panic. That's the biggest thing you do. If your stops hit your stop criteria, get rid of them. I still got a couple of sectors that are moving that if you're looking for, I'm going to help you find, but I'm also going to help you on the other side because, Scott, I'm not going to say it's time to short the market, but if the market's going to give you a day like today, I would definitely take advantage contra ETFs. Now, in our day trading room, the Jockey Club, I got into a couple of them, but my guidance was I'm not holding them overnight because just as quickly as the market went up yesterday, it goes down today. Who's to say that it's not going to flip and go again tomorrow? So this is why I say manage your trades. If the market looks like it's too volatile for you right now, you might want to sit on the sidelines or hedge your portfolios. That's the best guidance that I can give you. I'm not going to give you and say, go buy this stock or go. I think that those decisions are your decisions. I can only point you in the direction of things to look for because I'm not a fiduciary. Ooh, can I say that, Joey? I can say that. That's not a bad thing. It all depends on what's in your mind. I'm not a fiduciary. I'm not the guy that can tell you what to do with this stuff. But you know something? Should I still do options, says Coco? I'm still a fan of options, but before you do that, where is the market? What is the market doing? And we're going to talk about that. Before you decide whether you still want to be long or you whether be short in the market, what's the trend of the market? And we're going to look at that in a moment. And that's going to answer your question. I follow the industry sector and stock as well as the MTI and confirmed calls. Maria, I think that from a VectorVest perspective, those are all great things to keep on your radar. All of those. All right, so I wanted to spend a little bit of time there because it's interesting. What other notes did I take from the Fed? Disruption to supply is longer than has been expected. That's going to affect people's bottom lines come the next quarter. You notice that a lot of companies are coming up. They're beating earnings, but the forward guidance is not there. All right, the forward guidance is right there, not there. Kenneth says, Glenn, 3 things going against us: interest rates, inflation, and the war in Ukraine. And the war in Ukraine is helping with some of that supply stuff, Kenneth. In baseball, 3 strikes and you're out. Well, you know, I'm out. When you say I'm out, am I out of the market? Do you sit on the sidelines? I'm not going to tell you to do that. I mean, because some of you got some really good long-term positions that you need to hold. I will tell you probably need to hedge, whether it's with an option of buying puts, doing a collar on your whole portfolio, or buying a protective put on your whole portfolio. Those are things that you need. Alex on Facebook says oil and natural gas kept up because of the war. I still think that energy stocks are the way to go. If oil keeps moving up and gas keeps moving up, I'm not going to tell you not to be in that space. I'm not going to tell you not to be in that space. Raphael says, don't forget China. Well, China in Shanghai with all of the COVID stuff is affecting supply as well. So there's a lot of things out there affecting supply. The war in Ukraine, China, and just the ability to get to stuff. The supply chain is jacked up. And a lot of people are like, well, we're going after inflation, but the real problem is the supply chain. All right, fix it. How are you going to fix the supply chain? Think about that. I need somebody, if somebody's going to really quickly say, well, we need to go after the supply chain. I know from our side, a way to fix the supply chain is, from an oil perspective, drill more. That's one way to fix the supply chain from an oil perspective, which plays a big role in the inflation picture, right? All right, because oil prices are going up. And that's a big part of our inflation is energy, or specifically oil. All right, so what is that? Sonny says EU weaning off Russian oil will keep supply tight and prices high for the foreseeable future, Sonny, for the foreseeable future. All right, so with all of that being said, I need to make sure that you guys out there ain't panicking. I don't want you to panic. All right, I don't need you to panic. I want you to keep your head off the swivel. And with it, everything that we do from a VectorVest perspective is designed to keep you off the swivel and keep you focused. And that's what I want everybody in here to do. Now, if you haven't already, I normally do this in the beginning. If you haven't already, hit the subscribe button if you're brand new to the channel. This is the kind of content we bring to you every Thursday. Hit the subscribe button, hit the bell icon so that you'll be alerted to when new videos like this come out. If you like the commentary, hit the like button as well. And I think today is probably one of the biggest reasons why I want you to share this content. There's a lot of people out there who are confused on what to do and how to manage their portfolios. Share this video right now. Let's get more people into the room. Let's get them in a position where they can start making money. Columbus says, it's time for stagflation and rebalancing the market. How many of you, Columbus Cop, how many of you saw the video that I just put out on our YouTube channel, Stagflation, Disinflation, Recession? Talks about stagflation. I don't know if we're quite there for stagflation yet, Columbus Cop. Not yet. Not yet. David says, I'm thinking contras if VVC closes and confirms below the 5.2 low because the next support level is at 52.36. We're going to talk about contras today. We're definitely going to talk about our government could reduce inflation with temporary cuts in sales tax and gas tax. I seen that a lot of states are on board with a gas tax holiday with cutting gas taxes. I saw that was out there. I just saw it. I haven't heard anybody talk about it any more than that. And someone says, impossible to fix the supply chain. It's going to take 2 to 3 years. I totally agree with that as well. Somebody said they bought SJT. I talked about that. I own that stock. That is my petro play. I own that stock, and I believe it pays a dividend. I think it does. But I'm in it on that perspective. All right. Contras. Jeff on Facebook says SQQQ is hot. Absolutely. It is. It is absolutely. All right. Let's talk about what's going on in the news. Let me bring that up. Web stories. Now, this is coming off of investing.com today. U.S. rate futures prices in a 75% chance of 75 base points Fed hike in June. The Fed came out and said that the 75 basis points pretty much is off the table. That's pretty much what he said. He's going to stick to the half basis points, 50 basis points. How many of you think that this can come to fruition? How many? Type a 1 in the room if you think that there might be a 75 basis points in June. Type a 2 if you don't believe that. I want that both on Facebook and on YouTube. Type a 1 if you believe this story. Type a 2 if you don't. Now, deep in my heart, I'm giving you my opinion. Deep in my heart, I think we need it. Deep in my heart, I think we need it. But I don't think that it's going to happen. Nick says, Jeff, how would you have sit through with SQQQ? You wouldn't have, Nick. You wouldn't have yesterday. SQQQ would have got you beat if you sat through it. Now, a lot of people are saying one. Really? A lot of people, does it really matter over time, though, if they can reach their target rate? And you know something? I don't think we're going to be able to reach that target rate in the time that they think they can do it. It's really interesting how a lot of you think that he's going to do. He said, now, unless he was talking through the side of his neck, and those kind of people don't do that. Unless he was talking through the side of his neck, he said, for the foreseeable future, it's going to be 50 basis points. Now we're going to see. The economy needs a soft landing. Raphael, the economy may need a soft landing, but because the Fed came to the party late, I think that we're not going to get the soft landing. I don't foresee that happening. Deep in my heart, I do believe we will succeed. Listen, I'm the biggest optimist there is when it comes down to the market. But I'm also a realist when I come to talk to people in these forums. Because I don't want people to be shucked and jive, man. I want you guys to have real intelligible information to make decisions off of. The Fed is always late and then they overcorrect, says David. I don't disagree with that as well. All right, so it's going to be, John says, if the Fed listened to Glenn last year, this wouldn't be a mess because Glenn Fed chairman for 2024. I ain't doing that. All right, I just kept saying that they used the word transitory. And then I went back to the Princess Bride. I do not think that word means what you think it means. That's what I definitely feel. Jeff on Facebook says, general market trend is down. It's like 2 steps down and 1 step up. Well, Raphael says, who needs a recession? I think it's coming. I don't think we can stop it. You want a soft landing? I don't think the soft landing is there. I don't think it is. But again, I'm just a guy. I'm not an economist, and I'm quick to always tell you that stuff. I'm not an economist. I just can tell you what I see. Take a look at the video that I just did on stagflation, disinflation, recession. Joey, put it in the chat in case they haven't seen it yet. That's going to, understanding what those things mean and where we are in those points helps to really make a decision in regards to where we are. They say China's already in a recession. Has GDP gone down for 2 quarters, Scott? All right, that's part of my video. Has GDP gone down for 2 quarters? Raphael says the Fed says the economy is strong. That is one of the things that he did say. All right, that is one of the things that he did say. He says Ukraine, 2% gold, 30 billion. Jobs, unemployment low, labor demand strong, retail spending still strong. The economy is still going up. There's no ifs, ands, or buts about it. It's tough. It's tough to raise and do all of this while the economy, you want to slow it down, you want to stop it. That's the thing. You want to slow it down, you don't want to stop it. People, it's here, the recession. People are in denial who don't believe it. Listen, I don't call this a recession yet, Kenneth, and I'm going to be, and I'm not that I'm in denial. Not that I'm in denial, Scott. It wasn't who said that. It was Kenneth. Kenneth said, it's here. The recession's not here yet. All of the characteristics for a recession are not here yet, especially with the GDP not down for 2 quarters in a row. So I don't want to say that it's here. Is it coming? I think it is. Sonny is right. Remain calm, all's well, just like a line from Animal House. Well, I'm not using it from that perspective. Now, hyperinflation, I'm not recession. How about hyperinflation? I don't think hyperinflation yet. Hyperinflation means that inflation is not getting better at all and just running rampant. Inflation is the highest it's been in 40 years. But when the next inflation number comes out, I think you're going to be pleasantly surprised to see that it may be high, but that it's coming down, which actually puts us into the form of disinflation rather than hyperinflation. All right, so I'm just putting out all of that stuff. If you guys, I'm going to start looking at some stuff. If you guys feel that so far the conversation has been helpful in what your thinking is, just type a 1 in the room. Today, I really wanted to have a little bit more conversation, especially with the market being down as bigly as it is. And I did say bigly as it is. I wanted to start off today with some, not just, gloom and doom. I like that we have the ability on this platform to talk. All right, to talk. And I don't know if enough people out there on YouTube land do that. Talk to the people. Talk to your subscribers. They're the ones that help you to grow or not to grow. And I like being able to sometimes get to talk to you guys. All right. Glenn, let's take a poll. Recession at the end of the second quarter? I don't think it's a recession at the end of the second quarter. I think it's too quick for that. I don't think a recession happens till the end of the year or beginning of next year. All right. So, Glenn, you calm people's fears. Listen, again, I'm just a guy. All I want to do is talk to you. We need huddling for the emotional support. We might. Do we all need to sit back and go kumbaya? Yeah, probably not. All right, my next story. U.S. jobless claims rise, productivity plunges at the fastest pace in 74 years. Well, we get back to the jobs issue. The jobs issue, why? A lot of people look, and this is another one that bounces up good 1 week, down 1 week, up 1 week. Jobs are a problem because there's a lot of them and people are not willing to pay the wages needed to overcome inflation. There's no ifs, ands, or buts about that. Now, if companies do that, Stephanie says we are in a recession already. They will announce it at the end of the year. We'll see. And normally, and I get the statements. Normally, by time they declare a recession, the market's already on its way back up. That's just the way it happens. We are slow in that. Generally, after it says, hey, we're in a recession, the market is already on its way back up. So I understand that. Ulrich says inflation is surely not the only reason for the extreme volatility. No, I think that it wasn't just inflation. I think it was actually a lot of short covering yesterday. That was a lot of the volatility yesterday. And Hikem says, there's no logic in this market, guys. Don't try to find a narrative to predict it. You know something? I haven't tried to predict any of the market with the exception of saying when a recession is going to happen. Other than that, on a weekly basis, I always just say take what the market gives you, and I work with what the market is giving us. All right, that's what I try to do, Hikem. All right, so there's a lot of jobs out there. But it's skill set jobs, number one. Number two, the wages. And the Fed said that yesterday. The Fed said that wages are the highest that they've been in a lot of years. That's true. But the other side of the truth, Mr. Chairman, was that wages are not keeping up with the current inflation, which is running rampant. All right, so that's the issue. How is productivity measured? By how many people are out there being productive in the market. That's going to be my guess, Roger. That's going to be my guess, Roger. Do I know the actual numbers and how it's measured? The answer to your question is I don't know. But I am thinking that it's got to be with the amount of people that are out there working, being productive in the economy. Samuel says, should I buy another 30 shares of Netflix to balance my losses? That's up to you, man. Samuel, I can't tell you what to do. I can't tell you what to do. All I'm going to say is look at the graph. Look at the graph, and if you feel that the graph is going to give you the desired results of going up and making you money, then it's up to you. All right? And there it is. Rodney is on point there. A major majority of today's new jobs require special training. We are in a digital age, right? But I think that those jobs are willing to pay the money for those specific skill sets, I think. All right, so productivity plunges in the fastest and last. You know something? I don't know. Labor costs soar. The government is expected to report Friday that non-farm payrolls increase by 391 jobs in April after rising 431 in March. But there are signs that higher labor costs are starting to hurt small businesses. Why are the higher labor costs happening? Because they got to get people in the door. They're going to have to raise their wages. All right. A separate report from Global Outplacement Channel showed job cuts announced by U.S. rose. Job cuts rose. Interesting. I'm trying productivity. Let's go see. Hours worked increased at a rate of 5.5% in the first quarter. Labor costs, though, single unit output shot up 11%, followed a 1% growth in October, December quarter. Unit labor costs increased 7.2% from a year ago. People are paying out more. Not only are they paying out more, but now the part of labor borrowing money, prices go up. You got to pay a little bit more money to pay back the money. Why are you doing that, Joey? Countdown vid. Do I need to? Is that for me? Joey?
No, I wasn't doing anything.
Oh, okay. The mouse kept moving up and down. I was like, I thought you was trying to catch my attention. All right. There's no getting around the fact that tight state labor market has pushed real labor costs for employers well above levels consistent with the Fed's 2% inflation goal. So labor costs are homegrown and a signal that the Fed still has significant work to do on bringing down inflation. Does that help a little bit, Roger? I don't know if that does or not. I wanted to go further through to see if that helped a little bit. Should share some of those CEO bonuses. Ooh, yeah, I'm not going down that path. That could help a lot of people, Maria. That really could help a lot of people, but I'm not getting into that. All right. What history tells us about stocks soaring after 50 basis points? Perhaps investors are right to cheer the first 50 basis point interest rate hike from the Federal Reserve since 2000. 22 years it took before we got that first half point. Even if that seems like a counterintuitive reaction. The S&P went up to rally 7.3% on average 12 months following 50 basis points rate hikes from 1978 to 2000. This is just history. The largest gain over 12 months was after the Fed lifted rate by 50 basis points in 1995. The trend was not foolproof. The S&P did lose 12.3% 12 months following a 50 basis point hike in May 16th of 2000. All right, so it looks like just historically, when we raise the interest rates 50 basis points, the market does that. That's very interesting. Powell gave a softer signal on being ready to go beyond neutral into restrictive territory than might have been expected and was optimistic about the prospects for a soft landing. I don't know about a soft landing, folks. I just can't see. All right, let's do this real quick. How many of you think we're going to have a soft landing, type of 1? If you don't think we're going to have a soft landing, type of 2. Cody says, I believe many are quitting their jobs to get better paying jobs since demand is high. And that's, if you want to get a raise, I think that's what it is. Oh, so what is it if you think, what was this said? What did I just say for the 1 and the 2? Joey, what did I just say? Do you know what I just said? Were you listening? Dang it. What did I just say between the 1s and the 2s? I'm getting forgetful. That sucks.
If we were getting a soft landing or not.
Oh, so one if we're going to get a soft landing, 2 if we're not, right? A lot of 2s. A lot of 2s. A lot of people think no soft landings. I got some. I got some that think so. Nick on Facebook says 1. Man, everyone is all optimistic. I know we are all optimistic. Alex says 1. Jeff says 1. Nick says 1. A lot of people think we're going to get a soft landing. Which one is the soft landing? 1. 1 is the soft landing. 2 is we're not going to have a soft landing. Now, Raphael says 1, that there's no alternative. This report seems to prove that investors as a group no better than the Fed where interest ought to be. And you know something? Interest rates, not even that, the markets should be the ones who dictate all of this stuff. That's the way it's supposed to be. Soft landing like PRPL, the mattress company, more crash landing. I hear you. Columbus Cop says Powell is good. I don't disclaim that. I think that Miss McClintock, welcome. I think that he is good. Bob says soft landing 2022, 2023 is bad. I think that no matter what, I think 2023 is going to be bad. I think that as well. All right. So that was just a little history behind all of the times, or some of the times, where we raised the interest rates by 50 basis points. What we saw yesterday wasn't abnormal. I didn't say he wasn't, Kenneth. Kenneth says Powell is late to the party. I didn't say that, but you know why he was late to the party? He was trying to get fully employed, and that just wasn't happening. That just wasn't happening. Alex says he's not like Volcker or Bernanke. You know something? Volcker was more like, yo, we need the pain. Let's just go for it. All right. We need the pain. Let's go for it. All right. All right. What else do I got going on here? So that's what's going on from a market perspective. I spent a lot of time today on the market, and I'm okay with that as long as you're okay with that. What am I looking for? Here's my two stocks that we look at for the market, the SPW and the VVC. And if you want to see some volatility, let's go peep this out. Let's go put this on a 3-month graph. You want to see some volatility, look at that. Now, we did get a hammer formation here on 5-2. All right, we did get, after the market fell, we found a level of a hammer formation, follow through. And then yesterday, big follow through, but it wasn't until afternoon when it happened. And then today, man, we just gave it all back. We just gave it all back. And now I'm looking at my 3 and 8 exponential moving averages. Look at that. Yesterday, the 3 never really, even with the big update, the 3 never really crossed above the 8. We never got confirmation of that day. Well, the second part of not getting confirmation of the day is today's action. A couple of things happening at the same time. And man, we do have a level of the low, a 3-month low on the S&P sitting at the value of 405.02. And right now, we're about $7 off of that, 7 points off of that. All right. Look at all those big red bars. And it's true. You see all of the green bars? Excuse me. But look at the big red bars. Who said that? That was John. Look at that. There's a lot of red bars, but not only red, big red. Well, who likes big red gum? I like big red because it's cinnamon. But look at the big red bars. All right, so it looks like when the market goes down, it goes down. When it goes up, it's like, hey, let's go. When it goes down, it goes, no, I go down now. That's what the S&P is doing. All right, so that's big. After a couple of years with pandemic, we need a couple of years of prosperity. All right, it'll come. It'll come. But after the couple of years of the pandemic, what did we do? We did a lot of stimulus. So we can get into the couple of years of prosperity. Well, that could have happened, but with the couple of years of stimulus, it felt like a couple of years, prices rose. That's part of what happens, right? That's part of what happens. Let's go look at the VVC. Same kind of scenario. Still big red bars compared to the green bars. Big bar. Same thing. The 3 never crossed above the 8 on that good up day yesterday. Look at the bigger down day. All right. It's blood all over, and that's fine. It's fine. But when you say it's blood all over, do I panic? The biggest thing is we don't panic. Stephanie on Facebook says the Bears became in control. Well, yeah. Overall, here's our let's go back to the S&P. What's it doing? It's in a downtrend. There's no ifs, ands, or buts about it. I think that all of the major indices are in. Let's do this. VVC, SPY, QQQ, DJI. We normally do this on Mondays, but I'll do it today. The question is, are we in bear market on our indices across the board. And I think the answer to that question is yeah. All right, let's go put this on end of day 3 month. Move that over. Put that on end of day 3 month. Move that over. Put this on end of day 3 month. Move that over. Look at the markets, folks. Look, that's the VectorVest composite. That's the SPY. That's the Dow. That's the NASDAQ. That's it. You're looking at it. You're looking at it right there. Right? You're looking at it right there, folks. I got nothing more to say. So are we in correction, Tori, on all of these? Are they all down 20 to 30%? I think everything except for the NASDAQ. I think everything except for the NASDAQ is in that territory. They're all in correction territory. VectorVest is still telling you that we are in a bull market. Stephanie on Facebook says, what can reverse this severe down market? There's no catalyst in sight. Not right now, there isn't. Not right now. There's going to be a catalyst. It's going to be a point of when we can, when it gets down to that's all I can stand. That's all I can stand. I can't stand no more. At some point in time, the market's going to say, forget this. People are going to say, we're at great golden opportunities to buy because stocks have been beaten up so much. They'll start buying back in. It'll happen. All right, where's the next support? Depends on which ones of these I'm looking at. All right, look at all of the lows. Look at all of the lows. On the Dow, the next support sitting at about 32,272. Remember, these are 3-month graphs. On the S&P, I got a level of 40502. On the VectorVest composite, I'm sitting at a level about 5663. These are all based off 3-month graphs. And on the Qs, I'm sitting at 309.64. That's what I'm looking at, Shalish. All right, that is just based off of 3 months. Please note that people with debt against their portfolios are scared out of their wits. I hear that. And, something from that perspective, with interest rates going higher, they got to pay back at a higher price. I can't take that fear away. It is what it is. Only thing that I can say is that you need to make up the money the best you can in your portfolios. How do you do that? You stay with the hottest sectors, or you're going to hedge your portfolios. I think those are the best 2 answers that I can give you. All right. It's the best guidance I can give you. Now, if you're in stocks that you really, you're holding, you're trying to make money, but it's not in your long-term picture, you got to think about cutting them loose. You got to consider cutting them loose. All right. But if you got some, your Apples and all those stocks that are good upside plays, you buy protective puts against them. All right. You watch, Glenn, the NASDAQ at this moment is lower than the lowest price from all of 2021. Again, this is why all of these, that's not what I'm looking for. All of these, can I get more? No, I'm going to leave it on a 3-month basis. It is what it is, and I still think that there is a way to overcome some of this stuff. And you know what I'm going to do? I'm going off the beaten path right now, and I'm going to go straight into the contra ETFs. As a matter of fact, I'm not going to even use this list. I'm going to go even deeper than that. Here in the VectorVest software, we have a couple of great contra ETF searches. Buying contra ETFs and worst performing contra ETFs. 2 big ones. And normally I don't want to show you, especially if you're not a subscriber to the software, I'm not trying to show you all of the stuff that we have. Today, I'm still not going to show you all the stuff that we have. And I'm going to put this down to a 10. Look at the top 10. Worst performing contras. NRGD, look at where these are up today. How about real estate? Real estate's getting beat up, 8.5% up today. HIBS, beta, high beta. Contra ETF, 15%. Folks, from this perspective on being able to do something in your portfolio right now, this is the best that I can do for you. I'm going to put these all on a 3-month graph. Not all, because the market was more so going up than going down, these contras have been beaten up. Well, why not start to take a look at the ones that are starting to rise? Drip, oil. Ooh, am I ready to go short on oil yet? I'm not sure I'm ready to go short on oil yet. When Amazon loses $100 billion over 30 days, makes indexes an eye opener. Listen, I pay attention to Glenn, and you spelled it with two N's. It's the right way to spell it. Um, in every session here, we always pay attention to the indexes, Glenn. We do. And I look at them. I look at them to get a better feel of what's going on in the market, right? Ukraine war solution and yeah, if we can get that to be done and over with, but the problem is with that Eton is Putin's ego. Can he walk away from this without having claimed something? You know, I hear some talk saying, all right, we'll pull out, just let us keep what we have. And Ukraine is going, oh, heck to the no. I don't know how Putin pulls out of this without winning or taking something. There is the biggest downside to that. Amazon is down to where it was back in April of 2020. Yeah, I know. Listen, if I'm looking at some of these contra ETFs, notice that these are coming off of lows today. Big volume. I'm going to tell you, keep your eyes on some of these. How about Yang, China? The 3 and the 8's about to cross. What else is in here? Wow. BZQ. I own this in my personal portfolio. Look at the move on it. I needed to break above this level of resistance of 1372, but look at it. Look at the move. Look at RT is above 1. Keep your eyes on that. SOX is a little volatile all over the place, but this is the tech. All right? When tech goes down, SOX goes up. The faster tech goes down, the faster SOX goes up. All right? Myrick says, SDAO, SPXS, SQQQ, TZA, be a bear, be a grizzly, in it since January. I ain't going to be a full-on bear, but I am going to tell you how to play it. If the market wants to give you the opportunity to make money to the downside, these are good. DRV, I like that. Look at it. DRV, nicely moving up. Not that expensive a contra. Look at the volume on it. Look at RT. Look at this. Look at the contra as a buy recommendation right now. Hibbs, I do like high beta. When it moves, it does move. But when it doesn't, So there's the other side of this. I want you to look at contras. I want you to look at contras, but I don't want you to get caught up because, let me go back to this. Let me close this out. Because of the market timing graph, 3 months. Because of this, be careful trying to hold contras overnight. How many of you were in contras yesterday and got killed yesterday? Type of 1 in the room. How many of you were in, because the market was, how many of you were in contras yesterday and got killed yesterday? Type of 1 in the room. I bet you I'm going to have a lot of 1s in the room. Maybe I'm not. Maybe I'm just talking. But nonetheless, anybody who was in contras yesterday got killed. Now you say, all right, I'm going to get in the contras today. I'm going to hold them. Who's to say the market doesn't go up tomorrow? Think about that. Think about that. If there's a level to go all in to contras, and I'm not saying that you go full bore bear. Why? Now let me talk to you about that. Why would I not go full bore bear right now? Going back to my homepage, I got the levels of my buy to sell ratio and MTI still telling me the market's looking for a bottom. That's why I'm not ready to go full bear yet. If we were coming off of a level of a high and this was happening, I could get on board with that. But right now, I think the downside risk outweighs the upside potential. That's my opinion where I am right now. Now, does that mean, Sonny is right. Does that mean the market can't go up tomorrow? Sonny is right. What? Go up tomorrow? We still got 75 minutes today. You know something? How many of you have seen a big move prior to the close of the day? Well, we saw that yesterday. Who's to say that won't happen today? All right. Dale says, also got whacked last week. Rinse and repeat. I hear you. PJ Carr says, when would you go full bear? I think it's too late for me to go full bear, PJ. And I'll tell you why. Because the market has been depressed. All right. I think it's tough to go. Look at this. This is where I would have been full bear. Does that make sense right there, PJ? Does that make sense right there? There's the downtrending market. Now we're at a level where the market is looking for bottoms. All right. So this, and even here, I still wasn't full bear because we still had these up days, these nice enough up days to keep me from being full bear. The full bear is not going to happen until we come off of a session high and start falling like crazy. All right. So, southern U.S. states could face COVID-19 surge this summer. Do you think this will be a negative effect on the stock market? Absolutely, Alton. Absolutely. Because it's going to shut down people's ability to work. People are not going to be coming into work. It's going to affect people's ability to provide services and product if their people are not coming in. Now, that's what somebody says is going to happen. A surge this summer. Whatever. All right. I honestly think that we have gotten to the point in time of a semblance of herd immunity. Most people out there have already had it. I've had it, and I'm inoculated. I think that we've really come to the point of some semblance of herd immunity. All right, so we'll see. I'm not getting deeper into that. I'm sure not getting deep into that. You know what I like today? A lot of you guys and gals like Rebecca, new chimers in today. I'm loving that. I'm loving it. I want to hear from you guys. Contra's risky to hold overnight? Absolutely. Even in our day trading portfolio in the Jockey Club, I let them guys know that I wasn't going to hold my Contras overnight. And I'm up nicely on a couple of them. I'm not holding. It's too risky. I'm with you, Rebecca. I think it's too risky to hold a Contra overnight right now. And PJ says, thank you. You're welcome, my friend. I appreciate the convo, folks. I really appreciate the convo. All right. Real quick, I wanted to, that was a little bit outside of what I wanted to do today. Where's my portfolio, Cy? That's the wrong portfolio. That's not the one I want. Oh, is it here? No, is it here? Close this. That's not it either. Joey, where's my stuff? Cy. Is it here? That's not it either. No! Tag nabbit! I closed out of Vector Vest 7. Sigh, Joey. So sigh. It's all Joey's fault. I'm blaming Joey. How to sign into it. It's all Joey's fault. Everybody who thinks it was Joey's fault, type a 1 in the room. If you think it was my fault, type a 2 in the room. All right. Let's go see where your allegiance lies. Let's go see. Let's go see where your allegiance lies. If you think it was Joey's fault, type a 1. If you think it was my fault, type a 2. All right. So, really, you guys are turning on me. You not know who I am? That's right. Rebecca says 1, of course. 1.5. No, y'all know who you're supposed to go to. All right. Watch list viewer. Trending Thursday, 5.5. I'm going to look at a couple of other stocks. I got to go back to my stories first. Let's go back to my stories first. One of my sectors that I'm looking at today is going to be the electronic stocks sector. It's up 3.5% over the last 2 weeks. Here's one of the stocks in here. Wire. We got into that stock today. Forecasted a fiscal year 2022 earnings of $19.18 per share. Issued Encore Wire in a quote issued to investors on Monday. Now anticipates that the electronic maker will post the earnings of $19.18 per share from from their previous estimate of $10.70. Man, that's big. And the stock went up bigly today. And the other sector that's moving is going to be office stocks. That's up over 2% in the last 2 weeks. And here's a stock that's looking at it. Why? This is a dividend play. I still think that a lot of people are still looking for dividend plays in the current market condition. All right. So a lot of people think it's Joey's fault, but they put in 1.5. You guys are being politicians out there. 1.5. Wow. All right, Joey. People do like you. All right, let's look at my list. Encore is on the electronic stock. Encore, WCC, and AVT. Look at that. From this sector that's up 3.5% over the last 2 weeks, my top 3 stocks by VST are those stocks. Let's take a look at them. So remember, we're looking at electronic stocks. The sector is on the move, right? The sector is on the move. Let's take a look at these stocks, put them on 3-month graph. This is something, wow, look at that. Wire started moving after it found a level of support. Wire is now trading at the $128, down day to day, all right? We all know that, but look at the RT went above 1. Stock is fundamentally sound. Relative value and relative safety are both above 1. The stock is fundamentally sound. Today's a down day. The stock is a down day. All right, but overall, the stock with today's most recent action, not even today, but with the most recent actions, turned into a buy recommendation. Another one in this space, WCC Westco International, about $140. A little bit of give back today, but on a big down day, it's making money. You know, look at that. The other stock was not making money. Wire's not making money, but moving up today. But WCC on a big down day, making money on big volume. I like that. I like to move it. I like to move it. And look at this one, AVT. These stocks, how many of you knew about these stocks? Type of 1. If you did not know about these stocks, type of 2. Type of 2. You know me, I always like to bring new stuff to the table for you guys. All right? And in my mind, these sectors are moving. These are still good place to find some stocks. I did not know that Avnet still exists. I spent a lot of money with them 40 years ago. Good management. I'm loving that. A lot of people, with the exception of Wire. My other 2 stocks are maybe new to the table, folks, and I'm loving that. That's what it's well worth, because not only am I pointing you in the direction of the sectors that are moving, I'm giving you some stocks to look at. And those Julian and Adrian did know, and that's fine. I didn't think that not everybody wasn't going to know, but a lot of people didn't. And that's cool. All right, so that's on the electronic side. Let's go to the office side, which is looking at AVY, what else? BRC, and EBF. EBF. Where's that? Towards the bottom. These are stocks that are in the office space. And that sector is up over 2% in the last 2 weeks. So let's go check those out real quick. Put those on 3-month graphs. These may not be nearly as pretty, but I do like it broke out of a channel. AVY did break out of a channel. Went above this level of resistance, but is going back and forth. RT is above 1. Relative value and relative safety, both above 1. The stock is fundamentally sound. Wow, AVT beat earnings estimates by over 50% last week. See, I didn't even know that. I'm just looking at the most recent news. I'm telling you, keep your eye on that Avnet. We found that in that space, and it's a good-looking stock. Keep your eyes on that, all right? What else is in here? Now, BRC, office supplies, a lot of sideways move. RT is above 1. Relative value is above 1. Relative safety is right at 1. Fundamentally, I think it's solid. The stock should outperform a AAA corporate bond by 26%. Positive earnings, and they're growing their earnings at a clip of 17% a year. I would wait on this one. I would definitely wait on this one. And the last one, wow, EBF could be coming off a bottom, bouncing up. Relative value above 1, relative safety below 1. But it's in that space. All right, this is still in that space, and I'm maybe finding one that could be pulled back, and you could be buying off of the pullback. All right, so now we got about 6 minutes. All right, that's all my stocks for today. The majority of the stocks, how did I do that? The majority of the stocks in the time that I wanted to spend was on the condition of the market to make sure that you guys had all of the information that you needed to make good decisions. Did that come across? Type of 1 if it come across. If you felt like you just wasted your time, type of 2. And you know something? Even if you type a 2, I'm not going to hate you. I'm not going to hate you. All right. So if you felt that the conversation was well worth it today because of the extreme condition of the market today, type a 1. If you really don't care, you can type a 2. And again, there's not gonna be any bad play on that. Sometimes I think it's important that we talk to each other. Before we get into looking at some of your stocks, Stan's International Forum today is going to be this Saturday at 11 o'clock. Make sure you're there. All right, 11 o'clock a.m. on our YouTube channel. I should have done this earlier, but nonetheless, Stan, don't forget that. Stan International Forum is going to be this Saturday at 11 a.m. on YouTube. Don't miss it. Sandy says, you always bring important information to us. Good. That's what I want to have happen. That's what I want to have happen. If you liked it, yeah, hit the like button. I don't know how many likes we got so far today. Well, we got 104. We got past my 100 likes. Awesome. But if you haven't hit like button yet, hit it. All right. You're the bomb. Good contact. There you go. I like it. And Glenn, you spell your name the right way. I'm going to look at the first 10 stocks today. The first 10 stocks that come across, because I've only got a few minutes. The first 10 stocks that come across, I'm putting them in. 1, 2, 3, 4, 5, 6, 7, 8, oh, hold on. And I need the people on Facebook. I'm going to take the last 2 off of Facebook. NVDA, I need another one on Facebook. A lot of the ones that you already put in on Facebook, I already got in my list. Mosaic, there we go. I'll take that one from Facebook as well. All right. I'm only looking at 10 stocks today. I'm only looking at 10 stocks. And here they are. Now, the reason why I put them into a watch list is because no matter who gave a stock, I want you to see where they sit in a list of all of the stocks by way of VST. So whoever gave me Zim, good play. Whoever gave me PKI, not so good. All right. That's the purpose behind that, to see where the stocks you gave me sit in the list. How many of them are sells? AMD and NVIDIA, because of microchip shortage, they are sells and PKI. How many of them are buys? Zim, Hudson, that was an earnings play, CEIX, and Mosaic. All right, so that's the cool thing. Which ones have the best upside potential? Zim, look at that, 1.9. That's very high on relative value. This stock should outperform a AAA corporate bond by 90%. I like that. And it's undervalued. And it's a shipping company. All right. And they have positive earnings. And they grow it by 45% a year. I love this company. I don't own it. I own Diana Shipping, which is DSX. And I'm doing a lot of that for its dividend. Let's go see if Zim pays a dividend. GPE, they do pay a dividend of $19.50. The safety is not as safe as the Diana Shipping dividend. Now that's not meant to scare you. It's just by analytics. All right, let's go take a look at all of these stocks. Put them on a 3-month graph. And Zim, I like the move. Ooh, hammer. There's the hammer. Hammer. Can't touch this. Do. Can't touch this. And there's the hammer formation. And look at the reversal. Broke through a level of resistance. Volume is, I like, it could be better. Relative value, love that. Relative safety, stocks in an uptrend. I do like Zim. I'd like to see it break above this level of resistance now of 67, 69, but I do like it. Next one, Nucor. Was hot. Not so hot right now, but interesting how it's fallen back. It's fallen back to a most recent level of support of 140, 163. Still got good upside potential. Still got good safety. The stock is safe. Interesting at where the stock's price has fallen to. Right to that level of support. Let's see if it can bounce. Do anyone know what happened to DraftKings today? It's not appearing in the brokerage account today. I don't know. I don't know. I haven't the slightest idea. I will do this. DKNG. DKNG. We'll come back to that. We'll come back to that. All right, so Nucor stopped right there, smack dab on that level of support. What else is new? Nvidia, sell recommendation. Where's earnings? Are they beating up on earnings? Last earnings play, they got hit and they stayed and then they bounced. They bounced with me. I want to, and then it fall down. And now it's at a level of support. The volume is pretty steady, though. Whether it's up or down, the volume is pretty steady. RV is above 1 RS. The stock is still steady, but I think a lot of issues going on with the microconductors or superconductors. You know what I'm talking about. Them things, right? Mosaic also was hot. Pulled back, found a level of support, hasn't broken down. Earnings came out, little sideways move. The 3 is below the 8. Be careful with that. All right, if you're in it, be careful with that. That's a good sign to say if you got some profits, don't give it all back. All right, positive upside potential, relative safety below 1, positive earnings and growing at a point of 38%. As I watch it fall, even though it's a buy, be careful with that. That's a good sign right there with the 3 and the 8 on end of day to get you out of the stock. Now, AMD. AMD, on the other hand, though, the 3 and the 8 just went above. Down day to day, but the 3 is still above the 8 after its earnings. If I'm going to play either one of these, I probably like AMD over NVIDIA. I like AMD over NVIDIA. All right, next in my list, wow, energy coal, like Arch. That's another coal company. Man, between coal and petroleum, folks, you can barely go wrong. Here's the earnings a couple of days ago, still moving higher, broke through a 3-month level of resistance at 48.97. Good upside potential, good earnings, growing at a clip of 37% a year. Bottom left, top right, it's perfect. Looks good. I like that. I like that stock. I cannot lie. Hudson, this was an earnings play today. All right, this was an earnings play today. Big move on big volume. I don't know if that's sustainable. I'm thinking that that's going to probably be a lot of profit taking tomorrow. That's a lot of volume. That's fear. This is FOMO, fear of missing out after that earnings. That's what I think. I think it's going to pull back because that's a lot of volume. Just my opinion. It does have good upside. They have positive earnings and they grow it at a clip of 41% a year. Apple, as much as I love Apple, I'm never in love with Apple. Where's it stopping right now today? Look at that. Here's a current level of support sitting at 155.29 after earnings. They beat earnings, right? But I think the market just said, no, we don't want to. It said, oh, no. And that's, I watch a lot of Instagram and TikTok. I do. If you don't know, we are now on TikTok. If any of you have TikTok, search for VectorVest. And it looks like every video that we have of me on TikTok is me ranting about something. I don't know. Do I ever type of 1 if I'm always ranting? Type of 2 if I'm calm, cool, and collected. Right? Type of 1 if you think I'm always ranting about something. Type of 2 if I'm calm, cool, and collected, baby. All right. Apple's forward guidance was an issue. I got you. Wow, a lot of you think I'm ranting? Really? What am I ranting about? What am I even yelling? I don't rant about nothing. Apple is a short since January, and it has, I'm not going to say since January. I'm only looking at 3 months. I will say that it has been a short candidate since March, the last day of March. It's been going down. You guys, that's right. You guys must think I'm calm, cool, and collected. All right. Apple I wouldn't buy right now, but it is stopping at that level of support. Keep your eye on that. What else is in here? LHX, telecom equipment. Big level of support at 231.27. The 3 and 8 haven't crossed. A down day with a down day in the market today. RT is not above 1. I'd look for the 3.8 to cross, and I'd look for RT to be above 1 in good volume. I'm not taking this right now. And last but not least, PKI, big down day today. The 3.8 just crossed on that nice up day and then turned right back around and crossed on a big down day today, and RT's below 1. And that was 2 days after earnings. All right. Those are your stocks. Let's look at DraftKings, 3 months. I don't know what the news was on it, if it's just today, but DraftKings has just been going down. It's just been going down. Wow, and it's been a sell or a hold for the last 3 months for the most part. All right, Nick says, when Apple, Google, Bitcoin all fall 5%, big down day today. I never imagined this yesterday afternoon. I think a lot of people didn't. Once they saw the big move to the upside yesterday. My biggest thing is that it wasn't substantiated by nothing. You know, the Fed raised the interest rate 50 basis points. And it's like we're going to turn around and go, yay! That doesn't make sense. This more so makes sense. All right. Joey, put me back on just me. What is it? Is it this one? Is it this one? I'll take that. All right. I'm done. We talked about a lot of things today. Hopefully you did share this link. And if you haven't already, once this is done, it's going to be on our Facebook, on our YouTube. I'm going to ask you, share the link to today's video. Just click on, that's right, because I changed it, didn't I? Because you made me, and some of them blamed you. Some of them did blame you. You know why? Because they love me, Joey. Oh, hold on, I got to pop it out. It should. All right, there it is. Now it's popped out. All right. Thank you. Oh, that's the wrong one. I need to put it. Did you break it? I just popped it out, though. Do I need to put it on screen 4? All right. Doesn't matter. It's just looking at me here, unless Joey can get it back up. All right. It's all right. Thank you guys for being here today. David says Joey is the man. I don't disagree with that. Joey is the man. But he breaks half the stuff that happens. It's all Joey's fault. All right. Joey, thank you for what you did.
That's a lie.
Huh?
That's a lie.
I do love you, bro. I love you, bro. You know I do. All right, folks. Have a great week. I'll see you next Thursday. Don't forget Stan's International Forum this Saturday at 11 a.m. on the YouTube channel. Share this video that we did today. I think a lot of people need to know what's going on. All right. A lot of people need to know what's going on. All right. Adios, arrivederci, ciao, au revoir, sayonara, aloha to all my peeps in Hawaii. Bom dia, salam, shalom, namaste, yasun. Until next time, folks. See ya.